Welcome back to Mortgage Markets and More. I'm your host, Peter DeAngelo, branch manager for Rate here in Totowa, New Jersey. Very excited for a do's and don'ts episode today. We talk about the market a lot. We talk about loan programs, all these things. But I realized I never spent any quality time to go through the true do's and don'ts when you want to get a mortgage. That is what we're going to do today. We're going to start off here going through 4 segments, actually. Segment 1 is going to be about before you even start, so getting started in the process. Then the second segment, that's when we're going to talk about the actual mortgage application process. The third segment, we're going to talk about your shopping, when you're actually out there shopping for a home. And then in the fourth segment, we're going to talk about the do's and don'ts when it comes to refinancing. So not just keeping it exclusively for home shopping, but I've got some tips for you as well. So you want to buy your dream home. Let's start from square one. That's awesome. But we don't want that to turn into a mortgage meltdown. So with these do's and don'ts, you will be able to ensure that you're going to have the smoothest process absolutely possible when you start looking for a home. So before you even start, before you even click on Zillow or Realtor.com to start checking out homes, what do? First and foremost, check your credit scores. Do this. You don't want to do it through anything other than a consumer platform, but go online. You can go to places like Credit Karma. There's freeannualcreditreport.com. You can go there to actually get a free copy. You won't get scores, but at least you can see what your history is looking like, payment history, credit utilization, all the things that matter for your credit score. You can think of it this way. Your credit score and your credit report is kind of like your dating profile for a lender, right? It may swipe left if there's a lot of credit problems. Don't open new lines of credit. When you open a new line of credit, you get a credit inquiry that gets reported on your credit profile. Inquiries negatively impact your credit score. The higher your credit score, the better your interest rate will be, the better terms you could possibly have for your mortgage, and the higher likelihood that you'll have for mortgage approval. So you're going to want to avoid that. Even if you're seeing, 15% off if you open up a store credit card, you're going to want to refrain from doing that when you are committed to the process of purchasing a home. Do get pre-approved, not just pre-qualified. Now, in the current state of things, I don't even think pre-qualified is even really in the conversation anymore. But to give you some context, pre-qualification used to be a way that a lender would have a conversation with a client over the phone, ask questions about their financial situation, not even run credit or obtain any documents, but just through that verbal conversation, a lender would send a letter and say, well, I spoke with them. They're pre-qualified to get a loan. In the current environment, that doesn't fly. You need to at least get pre-approved. And the tangible difference between the two of those things, a pre-qualification is typically just based on a conversation. A pre-approval, though, that is a conversation, an application being submitted, a soft inquiry or a hard credit pull, and you are providing documents. So there's a verification aspect in the pre-approval stage. Where we stand out a little bit, I wouldn't be doing my job if I didn't mention this, but at Rate, we take it a step further and we take that pre-approval process and actually, for our clients that are shopping for a home, get them fully underwriting approved from a credit standpoint, which means that we actually get the whole loan process done with everything outside of respect to the property, because we don't know that yet, but we can base it on an estimated taxes, insurance, price point, and verify everything with your documents. So that is a big do. My 100%, if you don't remember anything else from this section, do get pre-approved. Now, here's another don't. We're going back to credit. Don't max out your credit cards. That is not good. Your credit scores are also driven by something called credit utilization. So if you're going to have, let's say, a $1,000 credit limit on a credit card, and you charge that card, and when you get that monthly statement, which is what gets reported to the credit bureaus, when the monthly statement cycle hits, that's what gets reported to the credit bureau. Let's say you've got $500 balance on there. You're at 50% utilization. $500 is 50% of $1,000, your total credit limit. That's the danger zone. If now, next month, you haven't paid that balance down sufficiently, and let's say you have a $600 balance on that credit card with a $1,000 limit, your credit score is going to be negatively impacted pretty immediately. So you're going to want to make sure that you're not maxing out your cards. The sweet spot for credit, around 30% utilization. So if you've got a $1,000 credit limit, you're going to want to keep your balance on a rolling basis. If you're not going to 100% pay off that card, $300 or less is the sweet spot. You're going to get the most benefit there for your credit scores. So make sure that you keep your credit profile consistent. So this is the beginning part of the process. So you're not maxing it out, but now we're going to get into the application process, that next step. We want to keep everything consistent when we go to this step because that's how we're gauging everything for approval. So first, do stay in close communication with your mortgage advisor and mortgage professional. This is so important because if there's anything that happens in your financial situation, that could impact your approval. Let's say now that you have more money in your bank account and now you may want to put more money down. We established your budget at a certain amount. Keeping the communication at a high level will inform us then, would you possibly be interested in purchasing for a higher purchase price? But the same can go in the other direction. If, let's say, you get a pay cut, that's something that will tangibly impact your mortgage approval. So keep that line of communication open and consistent because that will serve you tremendously. The mortgage process is all about verification. We're going to find out. It's going to happen, and it's much better to get ahead of it so that we can work collaboratively together to manage any situations that may occur. Think of it this way. Surprises are great for birthdays, but not the mortgage application process. You're in the mortgage process now. Don't lease a new car, please, and don't buy a new car, please. Talk to your mortgage advisor. I have had this happen with clients that have purchased a vehicle or gotten a lease. Luckily, in the couple times that it's happened, we've been able to manage it, but that's something that could go nuclear on your mortgage application. If you get more debt added to your credit report, you have a couple things happening. One, your credit score is going down because it just got checked. Number two, newly opened credit line reduces your credit score. Thirdly, that payment that's part of that mortgage, that lease or that car loan has to get included into your debt to income ratios, which is a qualification factor. Adding that debt in may actually completely take you out of the game for approval. So if you need a car, at least have a conversation. I'm putting it in the don't bucket, but really it's a don't, but talk to your mortgage advisor. Do respond quickly to document requests. This is one of those tips that's just going to give you a much better experience in the process. The quicker that you're able to respond to document requests in the process, the more smooth your mortgage application process is going to be, the faster it's going to be, and hopefully get you prepared for closing as early as possible. So definitely respond quickly if there are any pending requests. Now, don't quit your job. Any change to your employment information is going to have an impact on your mortgage approval. So if there's any need to change jobs, see point one, talk to your mortgage professional. Job changes are one of those things to stay sensitive to, but if you quit your job, just understand that that may mean that you don't qualify for a mortgage anymore until you have returned to the workforce and returned to work somewhere. Now we're going to move on to the actual shopping phase. Now, you've gone through the mortgage application process. You have everything that you need. All ducks are in a row. You are a bona fide buyer in this market. Congratulations. Do work with a trusted local realtor. This is going to benefit you tremendously because they are going to give you great insights as to what's going on in the marketplace and be able to speak to any market that you may be shopping in particular. A good agent will help you strategize. They'll help you to identify red flags with possible properties, things like that. Don't waive your inspections. And this is just a general don't. It comes with a caveat again, and you're going to notice a common theme. Without consulting your realtor. You're going to want to talk to your realtor about the inspections. It's part of the terms of your contract. I'm just going to say don't waive them or expect to not waive them unless you've seen the property and have a level of confidence from the realtor or your attorney that there's elements of the inspections that should be waived. But my little 2 cents, don't waive inspections, and make sure that you keep at minimum, if you are waiving, at minimum, health and safety, structural, and mechanical. So if you make sure you keep those 3 things in there as contingencies, that most of the time is sufficient protection. But again, defer to your local agent and your local attorney who may be assisting you. Now, do include all the costs in your budget. This means not just the mortgage. That's just the start of things. And that tells you what your monthly payment is for taxes and insurance on the property and for your mortgage payment. Also, the closing costs. You got to take into account those things. But then after that, if you see the home and there's things that need to be remedied or fixed, make sure that you're budgeting for that accordingly. So do make sure that you're keeping all of your costs for the new home, out, even the things outside the transaction, in consideration. Don't get emotionally attached too early. So when you're shopping for a home, especially in this marketplace, it's competitive. Keep your heart guarded. You may fall in love with the home. It may be the perfect home for you and your family, but it's a competitive landscape. As far as falling in love with the home and making it, this has to be, you may put yourself in a little bit more of a compromised position. If it's a home to fall in love with and give it everything you got, go for it. But just generally, it's good to keep your heart guarded in this marketplace. Finally, now you have your home and you're going to possibly entertain refinancing. So here are some do's and don'ts for that part of the process. Do crunch the numbers. Get to know the numbers intimately. Understand what your goal is and make sure that that's part of your conversation with your mortgage professional. I like to include that in the conversation. I like to ask why. I can't do my job properly unless I understand properly what the needs are and what really means something to my clients. Secondly, don't just assume approval is a slam dunk because you got your mortgage before. Like I mentioned, changes in your financial situation can have a tangible effect on your mortgage approval and your eligibility. Third, do shop around and vet lenders. You're going to want to work with the right lender. Sometimes that doesn't mean just the interest rate. And what I will tell you from my experience, when there is tremendous opportunity to refinance, so if we think back to 2020 to 2021, that's what we call in my industry a refinance boom. There was just nothing but refinances. You could refinance anybody at that time. And for most people, it made a lot of sense and saved a lot of money. You want to make sure that you're working with the right lender. You want to make sure that you're working with someone you trust and that you like, because they need to be honest with you about what you're getting, and you need to have trust in that. That's my biggest tip for you in this refinance process. You're going to crunch the numbers. You're going to make sure you're not assuming that this is just a slam dunk. But the most important thing is working with someone that you know and trust. Now, the person who helped you with purchasing your home is going to be the best person to go to most of the time. They're going to know you already. You will have already had, hopefully, a great experience with them, right? But they may not be in the industry anymore, or their company may not be offering the best terms. So shopping around still could make sense. But you're going to want to focus on someone that you really know, like, and trust. And then lastly, don't forget about the closing costs again. Closing costs still get charged when you refinance. That being said, the bona fide cost for a refinance transaction, I'll talk to New Jersey. They're anywhere between $3,000, $3,500 up to $4,500, depending on the size of the home and the size of the loan. That's it for you. Those are your do's and don'ts. If you're interested in applying for a loan to purchase a home or possibly refinance in the future, this is your highlight reel of the things to do and not to do. But I won't leave it here. There is more. And if you would like to know more about the absolute perfect way to proceed with that mortgage process, give me a call. Reach out to me. All of my socials are linked below. You can feel free to email me at peter.deangelo@rate.com. Would love to have a conversation and see what I can do to help you. In the meantime, I hope you all have a great rest of your week and take good care.